Hello, this is Robert. I'm a tax attorney here at TRP, and we're going to be going over tax debt forgiveness, the ways the IRS drops tax balances. So there's four main ways tax debt forgiveness can happen: offer and compromise, currently not collectible status, a penalty abatement, or an innocent spouse request. Offer and compromise is the most favored option in the majority of cases. Some might also call an audit reconsideration tax debt forgiveness, but we'll cover that in another video. Basically, that's when you've been audited and all your rights are gone because it's been so long of time, but you submit something showing I really should owe less. That's what audit reconsideration is. Picking the right option is key to getting your tax debt resolved. I would not throw fresh start into this as forgiveness, but it did help relax the rules. A lot of places are saying fresh start is tax debt forgiveness. It kind of just changes the rules on tax debt forgiveness. So we'll go over them one by one. And first, offer and compromise. Now, this is the best tax debt forgiveness in the majority of cases. It's the golden ticket out of tax debt, settling for way less than you owe most of the time. Based on assets, income versus expenses, dependents, and the county you live in. So assets, if you have more assets than the tax debt, most likely you're not going to get a settlement. If you're really old and you live in a house that's not worth that much money, or for some reason you can't sell it, like we had a client that had a house in Mexico and that's worth more in tax debt, sometimes you still might get a settlement. But you're sitting on a 401k for $50,000 and you owe $40,000, you'll get some type of offer there, because after the 401k is valued at 80% and they take out penalties and taxes, you'll get something, but it's going to be a big offer. If you have a 401k, it's $100,000 and you owe $35,000, there's not going to be a settlement there unless there's some type of exceptional circumstances. Income versus expenses. At the end of the month, how much money do you have left over? If it's too much, might not get an offer. If it's nothing or in the negative, good chance you'll get an offer. Dependents. How many dependents do you have? If you're making $100,000 and you're single, unless you owe a lot of money, it might be pretty hard to get an offer. If you're making $100,000 and you have 7 kids, no assets, good chance you'll get an offer and compromise. The county you live in. So if you live in LA, you live in New York, they're going to give you higher amounts for some of the basic expenses. Like the housing allowance that they use in the calculation, for example, in Westchester County, New York, is like the highest. But if you're in Oklahoma, and you spend $5,000 a month because you live in an expensive place, they're not going to credit you with that necessarily. And sometimes you can get around that, but you really have to explain it well, and it's really case by case. But in general, the county you live in does have an effect on an offer and compromise. Not everyone qualifies, but many people do. If income is low, but they have assets, you may end up filing for currently not collectible status instead. CNC is sometimes the best option. If you're not really sure, you should have a tax attorney, help you out with it and figure out what's the best way to go. There's also doubtless liability offers, but those are really tough, and we're not going to cover those here. So currently not collectible status. The debt might just expire. Often considered the second best offer and compromise. You might have some assets, but at the end of the month, you have not a lot, if any, leftover income. You might just stay in this status if your income stays the same or lower. The IRS only has so long to collect. So every year, they're looking at the tax return. If it's about the same, it's very likely they're just going to renew the non-collectible status. If it's off or they feel like it for some reason, they may ask you for another financial statement. At that point, you might get into another non-collectible status, or they might try to get a payment plan or something out of you. Just because you're non-collectible status also doesn't mean you can file a settlement later. Sometimes, situations change, and it's better to do a settlement later. Debt expiration equals indirect tax debt forgiveness. Avoiding the debt and being out of the country can create a different type of CNC that will then extend the IRS statute of limitations. So that's another thing to consider. If you just leave, there's another type of non-collectible that say, hey, we just can't find the guy anymore. That one extends the statute. If you're out of the country, but you actually put your case in a non-collectible status and be compliant with it, that typically will not extend the statute. Penalty abatements. So that's just removing IRS penalties. This is another type of tax debt forgiveness. Penalty abatements are generally granted by the IRS for, quote, reasonable cause. The exception is on the first year. First-time penalty abatements are usually easy to get as long as the requirements are met. And those requirements are the prior 3 years, they look it up on the computer, there was no penalties assessed. And then, boom, it's pretty easy to get. To get a penalty abatement, you have to pay it off just besides the penalties sometimes, or be in some type of payment plan. If your case is just, in a collection status, you've done nothing, good chance they're not going to approve the penalty abatement. Innocent spouse requests. These are sometimes hard to get, and this way out of tax debt forgiveness is often not discussed with others because it is more difficult to get at times than just doing an offer and compromise. Pretty much if your financials show you get an offer in compromise anyway, unless you have a really, really strong innocent spouse case, sometimes it's better just submit an offer in compromise. Just you're going to sell for 50, $100 and just be done with it. And we'll go, it's case by case. You're not sure, give us a call. We'll go over it with you and see what we can do for you. Conditions for innocent spouse approval. File the joint return with understatement of tax due to item errors. Erroneous items qualify under 2 conditions. Failed by your spouse to report gross income or incorrectly reporting any deduction, credit, or property basis. Establish that at the time of signing the return, you had no actual knowledge or reason to know about the understatement of tax. This means you did not know about the understatement, nor did you have any reasonable way of knowing. So something just to mention here. So this applies when typically you're getting what's called a CP 2000 notice, or there was an audit later and they're adding money. That's when you're going to be using innocent spouse requests. So your spouse messed everything up. You had no idea. Get me out of it. Here's the additional conditions. After taking all of the details of your situation into account, the IRS finds it unfair to hold you accountable for the understatement of tax. You and your spouse or ex-spouse have no transfer of property to one another as part of a fraudulent scheme. Fraud includes the IRS or any other third party. So thing we should mention here is the IRS finds it unfair to hold you. So the IRS generally tries to be fair. A lot of people think they're not. Generally the agents will try to be fair in an innocent spouse case and give a realistic determination. However, if your financials already match up for an offer in compromise, it's just clear. If you're making $2,000-$3,000 a month, and you have a couple kids, you're probably going to be getting off compromise pretty easily. You make more money and you have more kids, good chance. If you just have high expenses, sometimes it might be a possibility. So offering compromise, if you can get it, is almost always better than an innocent spouse request, unless it's just a super solid innocent spouse request. Then sometimes it's easier just to send that. Or you don't qualify for an offer in compromise, then you want to do an innocent spouse request. So basically you're saying this is all your spouse's fault, or ex-spouse's fault, then you shouldn't be held liable. So the easiest way to get tax debt forgiveness is just have us do it for you. You can call us at 888-515-4TAX. Again, that's 888-515-4829. Or go to trp.tax, our website. You can hit up our live chat or click the Contact Us box and submit a contact request. We order the information, check it all out, file what needs to be filed, if anything, and proceed on the best resolution. If we cannot help you, we'll tell you. There's no false promises for settlements. We only submit settlements that have a good chance of being accepted. If there's no chance of acceptance, we're going to tell you. If the odds are kind of good, not that good, you're going to know before it gets submitted and spend a bunch of money on it. Going it alone, check out our free tax help guide at trp.tax/tax help. And thanks for watching.